Hello students, in this session we will be starting a new topic, that is ledger. Now in ledger we have to understand what is meant by ledger, what are its importance, then difference between books of original entry, that is journal, and ledger, then what is the format of ledger, then how can we prepare ledger from journal, then what are the closing and balancing of accounts, then from cash book how can we prepare ledger, and at last we will see how from other special purpose subsidiary books we can prepare ledger. But for this session we will see meaning of ledger, then format of ledger, posting from journal, okay, and the remaining distinction between theory part you have to read by yourself. Now let us see what is meant by ledger. Business transactions are first entered in journal or special purpose subsidiary books. In our previous sessions we have seen that from the source document we used to record those transactions in journal or special purpose subsidiary books. Then next what we do is that from that we used to take those entries and we prepare ledger, or in other words we can say that all entries recorded in journal or special purpose subsidiary books are then classified. They are categorized according to the account, and they find position of a particular account. All transactions relating to that particular account will be collected in one place, and that place is known as ledger. Okay, so in short you can give definition of ledger as it is a book which contains all accounts of the business enterprise, whether personal, real or nominal. I hope you all remembered what are personal, real and nominal account. So in ledger we prepare a book which have all the accounts that are related with our business, whether those accounts are personal, real or nominal. Now there are two definitions given by L.C. Cropper and J.R. Bartley Boy. You can read and you can by heart, but if possible you try to compose your own logical definition of ledger. Okay, just composing definition by yourself is not enough if it doesn't give any meaning. So your definition or your composed answer should have logical meaning as well. Now need and importance of ledger, then advantages of ledger, distinction between journal and ledger. It is very easy, you can give it a reading. Then let us come to the format of ledger. Now ledger is divided into two parts. First one is debit, second one is credit. Now it is same as cash book, but let us see what are the columns of ledger. On the debit side we have first date, then particulars, then JF, that is journal folio, then we have at last amount. On the credit side it is as well same, we have first date, then particulars, journal folio and amount. Now let us see what are the rules of posting. All transactions relating to an account should be entered at one place, means one account, one place should be there. In other words, two separate accounts should not be opened for posting transactions relating to the same account. If there are two customers with similar names, their accounts should be distinguished, means you have to write that will distinguish between the two accounts by writing their address against their names. Say the example is given, account of Anil of Karol Bagh and account of Anil of Chandni Chowk. These are two separate accounts. In order to identify which Anil is which account, so we wrote address as well. Then the next rule is the word to is used before the accounts which appear on the debit side of an account. Means suppose if this is any particular ledger account, then on the debit side if we are supposed to write any account, then we have to write to in here, like in cash book. And similarly the word buy is used before the accounts which appear on the credit side of an account, and in here we have to write buy. Then the next rule is, if an account has been debited in journal entry, the posting in the ledger should also be made on the debit side of such account. In particulars column, the name of the other account which has been credited in the journal entry should be written for reference. This you will understand with the help of an illustration. Then next rule we have, if an account has been credited, this point number 3 and 4 we will see with the help of an example. The next similar amount which has been posted on the debit side of an account should also be posted on the credit side of another account. Means suppose in one particular account we wrote that amount in debit side, then automatically it will that amount will be recorded on another account on the credit side because of the dual effect. Means every transaction have effects on two accounts. Then it is not necessary to write the word account after the personal accounts. As we have seen in journal, we don't use to write account in front of the personal account. So in this ledger also, it is not required to write account. Now let us see one example. On 1st April 2017, we sold goods for cash rupees 20,000. First we have to pass journal entry and then we have to record it in ledger. Now let us see what will be the journal entry. Since it is a cash sale, that means we received cash. So cash account will be debited as per rule of the real account. Debit what comes in. Then since this is sales, so we will write to sales account on the credit, and according to the rule real accounts rule, credit what goes out. So this is our journal entry. Now we have to post in the ledger. Now let us see how we are going to do that. See here, first on the debit side we have cash account, so we will prepare one cash account in the ledger. This is our cash account and this is the pro forma of ledger. Since in the cash account we are preparing another account related in this journal is nothing but to sales account. So since we have already two in front of this, we will write in the debit side to sales account, amount is 20,000. Finish. I hope it is easy. Now let us see once again. Since we are preparing cash account in the ledger, another account that we have is to sales account. So we will not do anything, but we know that we have to write to on the debit side of ledger and buy on the credit side. So since we have two sales account, we will write two sales account on the debit side, amount 20,000 in the amount column. Finish. Then next account after cash account we have sales account. That means we have to prepare another ledger account of sales account. So here is our sales account. Then see, in sales account when we are preparing it, we have another account that is cash account, and we don't have any to or anything in front of this cash account, so we will simply put buy in here, and we know that buy we are supposed to write on the credit side, so we will write in here buy cash account 20,000. Simple, isn't it? So let us see what are the posting of compound journal entries. Now compound journal entries are nothing but we know that either debit account will be to or credit account will be to. Means to debit account or to credit account makes a compound journal entry. Now let us see this example. If on 10th April 2017 cash received from Gopal and Company is 14,800 and discount allowed to them is 200, the compound journal entry means we have to first pass journal entry. We received cash from him, so according to real accounts rule, debit what comes in. So cash account is debited. Then we received discount from him, we allowed discount to him, and according to nominal accounts rule, debit all the losses and expenses. So discount allowed account is also debited. Then who is the receiver of who is the giver of cash? Gopal. So we will write to Gopal and Company rupees 15,000. Now we have to prepare ledger. Now first account here, first account that we have in our journal entry is cash account. So what we will do is that we will prepare cash account in ledger, and we have, when you are looking at the debit side, see we have two debit accounts, but when we are posting for debit accounts, don't look at this discount allowed. You just have to keep in mind is this to Gopal and Company. Okay, so we will neglect or we will hide this discount allowed, and we will write to Gopal and Company on debit side 14,800. Okay, so Then next, after cash account is finished, we have discount allowed account. So we will prepare discount allowed account in ledger. Now again, while posting in discount allowed account in ledger, you have to ignore this cash account. You have to ignore this debit account. Okay, so we have discount allowed to Gopal and company. That means to Gopal and company will come in the debit side. Okay, then next, after discount allowed account, last account that we have in our journal entry is to Gopal and company. So we will prepare Gopal and company account in ledger. Now see, we have only one account in credit and two account on debit. So both debit accounts entry will come in this Gopal and company. And since we don't have anything in front of this cash account and discount allowed, we will simply put buy in here. And buy we used to write in credit side. So we will write by cash account, by discount allowed, 14,800 and 200. This is how we used to post compound journal entries in ledger. I hope you understood properly. Okay, now let us understand how to post journal entry, and then we have to post them in ledger with the help of this illustration number 1. Now on April 1st 2017, CRM and Sons commenced business with cash rupees 2 lakh. So first what we will do is that we will pass journal entry cash account debit to capital account rupees 2 lakh. Okay, then see, the first account that we have in our journal entry is cash account. So we have to prepare cash account in ledger. So we prepared cash account, and since we have only one in credit, see in here we have only two capital, 2 comes in the debit side, so that means we have to write in here to capital account rupees 2 lakh. Finish. Then next, after preparing cash account, we have another account in the credit side, that is capital account. So again we will prepare capital account in ledger, and by cash we will write 2 lakh on the credit side. So it is a lengthy process, but if you keep on practicing, you will get the hang of it. Okay, then next transaction, we have purchased office furniture for cash rupees 20,000. So for that we will pass journal entry furniture account debit to cash account. So first account that we have in our journal entry is furniture account. So again we will leave some space and we will prepare furniture account, and in the to cash on the debit side we will write to cash account 20,000. Then after doing that, we have next to cash account, but in our previous transaction we have already prepared cash account. So what we will do is that we will not prepare to cash account, but in cash account that we have already prepared earlier, we will write buy furniture account on credit side in here. Buy furniture account rupees 20,000. Don't forget to write the date. Okay, then next journal we have purchased goods for cash rupees 50,000. So we will pass journal entry purchases account debit to cash account. So we don't have purchases account in ledger, so we will prepare purchases account in here. We will write to cash account on debit side by 50,000, but we have already prepared cash account earlier. So in cash account we will on the credit side we will write purchases on April 5th rupees 50,000. Then next journal entry, we have purchase goods from Vishal Trading Company 25,000 and from Mohan Garments rupees 16,000. So this will be our compound journal entry. See here, altogether purchases account will be debited and Vishal Trading Company and Mohan Garments Company account will be credited, because we know that this is a credit purchase. So purchases account we have already made. So in purchases account we will write to Vishal Trading Company to Mohan Garments altogether. See here, to Vishal Trading Company Vishal Trading Company, and to Mohan Garments rupees 25,000 and 16,000. But we hadn't prepared Vishal Trading Company, so again we will prepare one new ledger account, Vishal Trading Company, and on the credit side we will write April 8 by purchases account. Why? Because see, Vishal Trading and Company, we cannot write to Mohan Garments. We cannot write to Mohan Garments on the debit side because both of them are in the credit of journal entry. So we have only purchases account on debit side. So in Vishal Trading Company we will write by purchases account on the credit side, and in the Mohan Garments account also we will write purchases account. So after Vishal Trading Company you leave some space and you create one new Mohan Garments account, and on credit side you write by purchases account rupees 16,000. Then next journal entry we have return goods to Vishal Trading Company. We purchase goods from Vishal Trading Company and we return some. So journal entry for this will be Vishal Trading Company is the receiver of goods and we are returning purchases returns account 5,000. So since we already have Vishal Trading Company, we will just write in the Vishal Trading Company to purchases return account 5,000. But we don't have purchases return account, we only have purchases account. So we will create one new purchases return account, and in that we will write by Vishal Trading Company on the credit side 5,000. Then next journal entry we have paid cash to Vishal Trading Company in full settlement of their account after deducting 5% of cash discount. Means we purchase goods worth rupees 25,000 from them, then we return 5,000. That means we are now supposed to pay them 20,000, but we paid some amount by after deducting 5% of cash discount. So 5% of 20,000 is nothing but 1,000. Okay, so we will write Vishal Trading Company account, Vishal Trading Company debit, cash is going out from the business, so cash account will be credited, plus we are receiving discount from them, so discount received account will be credited. 20,000 we were supposed to pay them, but we received 1,000 of discount, that is nothing but 5% of 20,000. Okay, then altogether actual cash we paid is 19,000. Now for entering in ledger, we already have Vishal Trading Company, so in Vishal Trading Company's ledger account what we will do is that we will write to cash account to discount received account 19,000 and 1,000. Okay, then next we have cash account already prepared by us, so in cash account we will write by Vishal Trading and Company the actual amount of cash that we paid them 19,000. Then next account we have discount received account. Since we don't have discount received account, so we will prepare a new ledger account, that is discount received account, and in there we will write by Vishal Trading Company of 1,000 that we actually receive discount from them. Okay, 1,000 we will write in here. Then next journal entry we have sold goods for cash rupees 40,000. That means we sold goods for cash and we received 40,000. So journal entry will be cash account debit to sales account. Since we already have cash account, so in the ledger we will write to sales account rupees 40,000, and we don't have sales account, so we will prepare new sales account, and on the credit side we will write by cash account rupees 40,000. Then next journal entry we have sold goods to Hero Limited less trade discount of 10%. Means we sold goods worth rupees 30,000 and we got 10% of trade discount. So for journal entry it will be Hero Limited to sales account. Remember, we don't record trade discount in journal or in our books, so we can simply deduct 10% of 30,000 from 30,000. Okay, so 10% is nothing but 3,000, and after deducting that 3,000 we got 27,000. Now first account is Hero Limited. We don't have any Hero Limited in our ledger, so we will prepare Hero Limited account, And on the debit side, let us see the journal entry. We have 2 sales account, so 2 means on the debit side of Hero Limited we will write 2 sales account rupees 27,000. Then next another account that we have is sales account. So we have already prepared sales account, so in the sales account we will write by Hero Limited rupees 27,000. Then let us see the next journal and transaction. CRM withdrew from business for his personal use, cash 10,000, goods 4,000. That means it is again a compound journal entry. Since he withdrew goods as well as cash, we have to pass compound journal entry. Let us see what is that. Drawings account altogether will be debited. To cash account, he took out 10,000 worth of cash, and purchases means 4,000 worth of goods he withdrew. So altogether drawings account will be 14,000. Now come to the ledger creation part. Since we don't have drawings account, we will prepare one new account, that is drawings account, and on the debit side we will write to cash account 10,000 he withdrew, and to purchases account 4,000 worth of goods he withdrew. And let us see the journal transaction. Since we already have cash account, in the cash account we will write by drawings account, actual cash withdrawn by him is 10,000. Then purchases account, again we have purchases account, so in purchases account we will write by drawings 4,000 worth of goods that he actually withdrew from the business. Then let us see the next transaction. Paid to Mohan Garments rupees 7,800 and we received discount of rupees 200. So let us pass journal entry for that. Mohan Garment is the receiver of cash, so his account will be debited. Then cash went out from the business, so cash account will be credited. Then we received discount from him, so it is our income. So income or gain, okay, and according to nominal accounts rule we have to credit this account. Since we have Mohan Garments already prepared in our ledger, we will pass entry to cash account 7,800 that we actually paid to him. Then to discount received account 200. Okay, now see, next is cash account. We already have cash account, so we will write by Mohan Garments the actual cash that we paid him 7,800. Then next we have discount received account. We already have discount received account, so in here we will write by Mohan Garments rupees 200, the actual amount of discount that we received from him. Then let us see the next transaction. Received from Hero Limited 8,850 and discount allowed 150. So let us pass journal entry for that. Cash account debit, discount allowed account debit to Hero Limited. Now we already have cash account, so in cash we will write to Hero Limited 8,850. Then discount allowed account also we have discount allowed account. Do we have it? Let us see. No, we didn't have discount allowed account, so we will prepare discount allowed account, and in here we will write to Hero Limited 150. Then next account that we have in our journal is Hero Limited. Do we have Hero Limited account in? Yes, here. So in here we will write by cash account 8,850 and by discount allowed account 150. Now let us see the next transaction. Sold goods to Hansraj Limited for cash rupees 12,000. So this is a sales cash sale, so we will write cash account debit to sales account. Now we already have cash account, so in here we will write to sales account 12,000. Then we also have sales account, so in sales account we will write by cash account rupees 12,000. Then let us see the next transaction. Purchase goods from Pawan Brothers rupees 24,000. That means we purchase goods on credit from Pawan Brothers for 24,000. So the journal entry will be purchases account debit to Pawan Brothers. Since we already have purchases account, so in purchases account we will write to Pawan Brothers rupees 24,000, and we don't have Pawan Brothers, so again we will prepare a new journal ledger account of Pawan Brothers, and in here on the credit side we will write by purchases account 24,000. I'm not mentioning the dates, but in exam and in practice you have to mention the dates, you have to write dates. Okay, then the last entry is paid for rent 2,000 and salaries 4,000. Since both the payment was done on the same date, so it is a compound journal entry. So we will debit rent account, salaries account, and cash went out from the business, so cash account will be credited. So in cash account, since we don't have rent account and salaries account, we will prepare rent account as well as salaries account. Rent account, on debit side we will write to cash account rupees 2,000, the amount of rent that we paid, and in salaries account we will write to cash account again 4,000, that actual salaries that we paid. Okay, then next at last we have to cash account, means we already have cash account, so in cash account is credited. So on the debit side we will just simply put by in front of rent and salaries, and by we are supposed to write on the credit side, so we will write by rent account, by salaries account 2,000 and 4,000 respectively. So this is how you prepare ledger. Okay, until unless you don't have proper idea how to pass journal entry, you will not be able to post ledger as well. So it's better if you understand properly how to pass journal entries, and then after your ledger preparation will be very easy. Okay, so now illustration 1 has been done, and I hope you understood this topic as well as ledger, how to prepare ledger accounts. Careful means it is clear with you. Okay, so if you have any doubts, then you can contact me, but keep practicing. Okay, and for this session we will wind up here. Thank you.